Hello and welcome everyone for another weekly market commentary from StashAway. I have with me again our Chief Investment Officer, Freddy Lim.
Hi there.
So welcome back from your quick trip. But a lot of things happened also over the weekend, right? We had the G20 Summit, but before we get into like a recap of what happened, kind of where we stand, also closing the first half of the year, right? Maybe we can talk about that as well. I wanted to remind everyone about some of the events we have coming up. So next week on July 10th, we actually have two events, one in Singapore and one in Malaysia. We will be having in Singapore the deep dive, which you will be actually doing, deep dive on our asset allocation. This is something where you can learn a lot more about how we invest at StashAway and our model that we use with Freddy. That's on July 10th. You can sign up for that on stashaway.sg/events. You can also find it on our Eventbrite page and Facebook page as well. For the event in Malaysia, we have how to plan your retirement. It's a great talk on optimizing your retirement schemes and things like that. That will be in KL. You can sign up on stashaway.my/events. Again, as well as on our Facebook page and Eventbrite page for Malaysia. So that's events. Let's talk about the past event that we had, right? We've been building up to this now for what, 6-7 weeks of Trump saying more tariffs, more tariffs, more tariffs. They did have an hour and a half of a lunch, right? So maybe you can give us a little recap of what happens, kind of implications and things like that.
Well, what left me with the G20 was a lot of handshakes, a lot of photo taking, even a historic walk into the demilitarized zone in between North and South Korea. More pictures.
All via Twitter.
Yeah, exactly. And I think Daddy brought his kid to work as well at the G20.
Yes.
Ivanka Trump was sitting right beside Donald Trump. And I think next to Ivanka was Prime Minister Abe from Japan. So it was really hilarious. And so it's sort of a lot of criticism from the Democrats has been democracy is not just working like a showman and showing up, handshakes, taking pictures. You actually have to work on terms and agreements of contracts, right? Negotiations, real work. So nothing really substantial has come out of it, but we did get a de-escalation in the US-China trade tension. They may very well flare up again on random notice.
Yeah.
So
I think that's what people need to be aware of, right?
Yeah. Don't bang on it.
Even the first few days, the markets have been shooting up, right? Basically because of that, right?
Well, the market gapped up, but as we all know, any gaps never last. So the market gapped up. Whoever bought on that big gap opened. Yeah. They are probably now losing money, right? Yeah. So it's just that we just got to sort of stay true to your investment plan, stick to your risk level. You shouldn't overreact or to any of this positive or negative news.
And I think it's like, the thing is, now I think this whole movement is priced in because I don't think anyone believes this is the final step, right? Because it's been too many times now back and forth.
Yes.
Huawei was also discussed, right?
Well, we're still on the blacklist. It's just that Trump may grant temporarily exemptions on certain items that's not of a national security nature. And by the way, the item is not really specified yet. He's probably going to keep this for future negotiations as well. So mind you, Huawei is still held hostage. Yeah. This is not over.
Exactly. No, I think that's a good recap on that, and also make sure that you don't get too hung up on this one topic, right? There's a lot of other things going on that also drive equity markets, right?
Right.
So with that being said, yesterday then, of course, because now he can pounce on China for a week or two, right? Because they're working on things.
Well, no, Europe.
Exactly. Yeah. So what happened there?
Yeah, you knew before Airbus and Boeing has been a sort of a decade-long case at the World Trade Organization, where the US did have a case against the European Union about how they sponsor their airlines, right, in Europe. Yeah. And so this is sort of a case that never got resolved. Trump never really liked the WTO anyway, and he likes unilateral actions. So there's now threats of placing tariffs just simply on that matter of Airbus versus Boeing. Same as Mexico, unrelated to trade, but there's another issue elsewhere. I use trade tariffs to bully people to the negotiating table. So it's just another normal day in the Trump's office.
Yes, very much so. So this is kind of what's going on currently. First 6 months of the year wrapped up for us, everyone, right? So we're already into July. Actually, the first, the couple numbers maybe that you can mention here, right? Because it's been not just an easy ride, right? If you actually go back, listen to every commentary we've done, you'll see how many crazy topics we talked about, right? Or how bad the news were at certain points, and the first 6 months have actually been quite good, right, in terms of returns.
Yeah, I'll be blunt. Most of the entertaining stuff we talk about here, entertainment value.
Yeah,
strictly entertainment. They don't change your investment plan. It has no bearing on how our algorithms build and manage your portfolio. It's more entertainment value. Take for example, today, chasing the PMIs for China went lower than expected at 52 rather than 52.6. Small differences. Market overreacted this morning and then went back up.
And how much value can we put to those numbers anyways? They get revised.
Exactly.
50 times,
this money
right?
got revised.
Yeah.
So, and now actually 52 is still above 50, the neutral zone. So they're still growing, just growing a bit less than expected. So people are just overreading it a lot. And then people go, whoa, China's slowing a bit more. No, I mean growing less. What's going to happen to Singapore's semiconductor industry, electronics industry? What's going to happen to South Korea? And there's so much noise in these days because of more technology, more efficient media, traditional and social medias, right? And Twitter.
Yes.
So we are just bombarded with more and more noises every single day.
Yeah.
We need to learn how to tune them out.
Yeah. No, I absolutely agree. And I think this is something we preach quite a bit always, right? Is the consistent investments, right? Because you never know how markets are, right? If we go back to December, maybe you can talk about a little bit, but like the last quarter of 2018, right? And now where we come from to where we are right now, why would it make sense then to use dollar cost averaging into the market actually?
I would say this. I still recall sitting on the Christmas Eve, watching Trump go crazy with the government shutdown in the U.S. and market was tanking like no tomorrow. And I was like, whoa, I would have reacted if it's up to me as a human to all these noises and just cut off. And because that quarter ends up to be the worst quarter since 2011.
Yeah.
But however, if the human in me would have done that, we would have missed the biggest Q1 rebound since 2009. That goes
huge, right?
It's huge, and that goes to show the fallacy and the danger, right? In terms of trying to time the markets.
Yeah.
It's nearly impossible.
It is nearly impossible, right? And I think it goes to show it continued throughout the year, right? May 2019, right, was the worst May since 2010 and the second worst in 1962.
Oh wow, I didn't know that. Wow.
So this is like, but to put this into perspective, it moves, right?
Yeah.
And
but June was great.
Exactly. June was the best month since 2010. June was the best since 1955. Right. This is a long time, right? These things. So I think it's very important to, like Freddy said, right? If you have a long-term investment plan, keep dollar cost averaging into that plan, right? Do your monthly deposit. That's what you do.
Well, if you look at data, just look at data. Look at the monthly change in any asset classes. You always have a lot of flip-flop in terms of month-to-month changes. A month is down, next month is up. But overall, the net among those months in the year gives you a trend. And compounded over a year, you have positive return. But then to get that positive return, you have to live the short term is to construct a portfolio well, set the risk correctly, diversify, make it global, make it multiple assets, right? Those philosophies are meant to help you stay in the game and live through the volatility within your tolerance limit and hence earn that long-term return. That's called investing because it's not trading.
No, you want to protect yourself, right, from all these things. So I think that wraps it up really, really well. Thank you, Freddy. I hope everyone, you liked listening to this again this week. We will be with you again next week. If you have any comments, questions, concerns, whatsoever, reach out to us, support@stashaway.com, or you can put it here in the comment question section just below the video. We again have a good rest of your week. We hope to see you again next week.
Ciao.
Bye.